Welcome to another stage analysis video. It's Sunday the 10th of December 2023. I'm going to start this week's video with a look at some of the significant weekly bars, some of the stage 2 breakouts from the week, and then get into the regular members content, the indexes, industry group, bell curves, relative strength rankings, the market breadth and the watch list, etc. So starting off with GitLab here, GTLB. So this one has been forming a massive base over the last 2 years. It's made a few attempts to break out into stage 2 over the last year or so. We had an initial attempt really early on in 2022 which rolled over and failed. A few other attempts throughout the course of the last year. For those of you that know Wyckoff's work, we can obviously define this with a broader base structure here from what we call the selling climax, the all-mac rally secondary test. So we start our base structure from this area, and you can see this broader structure that's developed over that time. So this is your phase A area into phase B with an up thrust pulled in, and then we've had what we call a terminal shakeout down here, a spring number 1, where it's dipped below the base, it made a stage 4 continuation break lower, and then quickly reversed back into the range again. We had this significant bar back in the end of May, early June before coming back into the range here. So we consider this within the base structure at the moment in phase D of the base structure, but we have got a new stage 2 breakout attempt here in the last week following earnings results. So gapping up, got some exceptional volume, so second strongest volume week that we've seen in its entire lifetime. So this week here, the initial change of behavior back in June there before this now stage 2 breakout attempt. So if we look at this on a daily chart, you can see this in a little bit more detail. The recent structure here from June onwards, where it started to move up with that earnings gap up move at the start of June there. And now this follow through move, moving it out into stage 2. So it did break higher a little bit earlier before that move up, but it was still underneath this local resistance. So this was potentially be the stage 2 breakout area in this week, and you can see that exceptional volume as it moved higher, and it's consolidated in the following few days with on contracting volume, which is what we want to see. Ideally, you don't want to see it come back down below that gap up bar or come back into the range. If it starts dipping back into the range through here, then that will be a potential sign of weakness there, and then this could turn into an up thrust. So at the moment, looking for this to make a continuation attempt. We go back to the weekly chart. You can see what we'd be looking for with this. If we use in the Weinstein's method, we have something called the swing rule. For those of you that like to do targets, there's many ways to do targets, but to get a quick initial target, easiest way is just to use the swing rule, which is the bottom of the base to the top area of the base. So we've got the 26 up to the 55 there. So potentially with this, you just take that measurement, push up from there. So we'd get up to around the 80 area, which around 47-48% from the stage 2 breakout level. So that's what we'd be looking for as an initial target zone, somewhere up in this range. And you can see the IPO day low up in the low 90 area as well. So we'll see a good potential target area for the initial stage 2 move. But looking at the size of this base structure, how long it's been going on, obviously we could have a much bigger potential stage 2 move if this does get going, as there's a lot of built up energy within that. If we look at the Ichimoku cloud for this to look for the local near-term resistance, it's just started to clear that cloud resistance now, started to move out into clearer territory. So after that initial stage 4 decline. Right, let's move on. Next up, we've got Sentinel-1. So this one broke out into stage 2 the week before actually, but was still underneath resistance, and it did follow through this week strongly with another 21% move on exceptionally strong volume, one of its strongest volume bars that it's had in its lifetime here, as you can see, about the third strongest week it's had since its IPO. But it has had this large stage 4 decline through later 2021 into 2022, started to develop into stage 1 in the early part of 2023 here. So this significant bar here has been a major area of resistance in the near term, which we're now just started to clear above. If we look at this on the daily chart, You can see that gap up move on earnings there. Obviously started to break out into stage 2 through this area here, but the gap up starting to clear that major overhead resistance from this obviously significant gap down area. So we want to see it hold above this 22 area, ideally not dip back into where the original stage 2 breakout happens. We want to see it hold in this area and potentially continue to push up and out into stage 2 further. Again, swing rule on this one, if you're looking for a measured move, so we take it from, we got that about 12.86, so say 13 to the top of that range there at 22, so you've got 9 on top of the 22 there. So we're just moving up into the low 30s, so potential 40 to 50% initial swing target from the stage 2 breakout area there. Right, let's move on. Another one is Spotify. So this gapped up this week with some news near the end of the week. I think the CFO might have been being replaced. It was a news-based move that gapped it higher. Some strong volume coming in, made a stage 2 continuation breakout. So it's been in stage 2 since this week, back earlier in the year. Had a pullback, started to develop stage 3 through this area, and has now made a new continuation attempt. So we look at it on the daily once more. You can see that fairly clearly, starting to get back above local resistance levels, starting to get a bit more clear, a little bit extended in the short term with that at its +3 ATR level there. So but holding above the +1 ATR level, so that's this level here. So at the moment we want to see it continue to drive higher in stage 2 once more.